Did I ever tell you about the time I inherited an iguana?
Wait, I think you did tell me
Yeah.
you inherited
Yeah.
an iguana.
I mean, I know this happens. It's the old story, tale as old as time. Boy inherits iguana.
Can you sing that? That would be better. A tale as old as time.
I'm definitely not going to do that because that is not part of 5 Minute Finance. What is part of 5 Minute Finance is me, Matt Robison, asking kind of befuddled questions of our resident expert, Mike Morton, who is a certified financial planner and also the guy who's built his entire business, all of his work around making things simple, lightening the load, getting things off your to-do list forever. We're not optimizing here, okay? We are not the optimizing people. We are the let's make it simple and really, really good. Mike, let's say you've inherited something more valuable than an iguana. What I specifically want to ask about here is you've inherited an IRA, an individual retirement account. That's what you want to talk about today.
Yes. Yeah, this happens all the time. Inherited, not the iguana part.
No, the iguana part apparently happens too. I have an N of 1 to prove it.
Yeah. Inheriting IRAs. So lots of times when someone passes away, unfortunately, if they have an individual retirement account or a 401k or other kind of employer retirement account, gets passed to a beneficiary. And that is an inherited IRA. So you can inherit an individual retirement account from someone else, which is both sad and at the same time exciting. So that's what I thought we'd go through, what that means and how to think about if you have an inherited IRA.
This strikes me as the kind of thing that, I mean, maybe like a small percentage of people are dealing with this right now, but this is the kind of guide that maybe you want to file away because it will likely become relevant to you at some point, and there are some opportunities and some pitfalls.
That's exactly right. That's exactly right. So, yeah, it infects a lot of people.
Oh boy. Well, no, that's how you end up inheriting the IRA in the first place.
Yeah, exactly. A lot of my clients have inherited IRAs for various reasons, or approach me with like, "Oh, this is happening." I get a lot of questions about them, what to do, how to deal with them, especially when it comes to because there are rules, and so people are like, "I'm not even sure what the rules are," and you do a quick Google search, and they're super complicated. So it's definitely a thing to kind of sort through and keep your eye out for if you have one or just inherited one or, might be coming soon.
So as people listen to this, maybe they filed it away and they're revisiting this in a few years. What are they going to get out of the next 20, 25 minutes?
All right. So today we're going to talk what is an inherited IRA? So what is this thing? We're going to talk about the rules that surround inherited IRAs, the exceptions to those rules. You can't talk about rules without having exceptions. Some tax strategies for utilizing your inherited IRA. So what are good tax strategies? Don't forget investing inside of this account. And finally, wrapping up with what you should do.
Before your parents leave you with an inherited IRA, they may also be asking another question, which is our listener question of the day. I hope people will hang on for that. It involves what your parents might be able to do for you and your kids' college, and whether they should do it now or later. So I hope people hang on for that. And I really hope people will hang on for our one thing segment at the end. It's so creepy.
This is one.
I'm really a little creeped out by this right now, and I'm not even prepared to talk about it. We'll hold on.
All right. All right, we'll leave it.
Inherited IRAs. Let's start us off. What are, seems obvious, but I'm not sure I could answer, what are inherited IRAs?
An inherited IRA, is one that you inherit from somebody else. So it flows through to you. So somebody passes away. This would be an individual retirement account they have. So it could be a rollover IRA, simple IRA, SEP IRA, traditional IRA, or Roth IRA. And a beneficiary, what happens when that person passes away is they hopefully have listed a beneficiary on their account. And that beneficiary then has a new account called an inherited IRA that is sort of opened up with their name, with the decedent, the person who passed away. It's got the decedent's name. It's got the beneficiary's name as part of the name of the account. And it's called an inherited IRA. And then there are lots of rules around that. But now it is an account. Like if I inherit it, then it says inherited IRA from Matt. It is now Mike's account. And I can log in and see this account alongside my brokerage account, my own individual retirement account.
Can we just do 30 seconds on something you said in there? And this truly lives up to the name of the pod, 5-minute finance, because this is a 5-minute task that you advised listeners and viewers to do a couple of years ago on a different episode, different topic. It's important that people go in and name a beneficiary for their IRA, right? And it's a relatively straightforward task. But if you're listening to this now and you're anticipating a few years from now, maybe a helpful tip to give the people in your life.
Super helpful tip. Matt, did I tell you now I log into Fidelity? That's where I have some of my accounts at Fidelity. I log in and it gives me a pop-up.
What's your account number and social security number? Sorry, go on.
And I log in and immediately it pops up, you do not have a beneficiary in your traditional IRA. Would you like to add one?
You? Oh man. Dude, it takes 5 minutes because you told me to do this and I did. I went in and did it. And
the reason I'm not stressed about it is because my traditional IRA has a few pennies in it. So,
right.
I'm not
You're all Roth.
I use it for the backdoor Roth, right?
Yeah.
So you put money in there and then transfer it. So it never really has any money. But yes, you should name beneficiaries in all your accounts. In fact, I'm going through with my clients now in our fall meetings. We go over beneficiaries. So we review all of their accounts. We check the beneficiaries, see if money's going to flow the way that they expect it to. And it's a good double check for, do you have beneficiaries on all your accounts? So please double check that.
Yeah, I mean, it's the kind of thing, I'm just reaching back to the way you described it a few years ago, that just saves your loved ones a pain in the ass. It's not like impossible to sort out. It's just more of a pain in the ass and something you can take off their plate.
Exactly. Yep, exactly.
So, okay. Now you're in the situation. You've inherited an IRA. This is like a pamphlet that you get at the doctor's office. You can just let it sit there like your 401k, right?
Yeah, that's right. You don't have to do anything.
I'm clearly joking, people. Hold on. I just want to make sure that Mike was paying attention, which he's not.
Yeah. So you definitely want to, if you are inheriting an IRA or if you just inherited one, you really want to sit down and come up with a plan. So that's what this episode is about, pointing out some of the things to consider. But ultimately, you have to come up with a plan because there are rules for these things. It used to be the case, Matt, that so individual retirement accounts, at some point you add money when you're younger, like the two of us, we're still adding money into our retirement accounts, including...
The is doing a lot of work in that young sentence, but go on.
That's right. We both are, right, Matt?
Younger than something.
Younger
than
something.
We will be, hopefully.
So we're adding to the retirement accounts, and that's where all my clients are as well. It's like, hey, we're working, we're adding to our employer retirement account, individual retirement accounts, but at some point you're going to take money out of those accounts. All right, when you're older and you have required minimum distributions, or you just decide you need some money and take that out. Inherited IRAs are kind of act like that, Matt. They're accounts that you need to be taking money out of rather than putting money into. So that's the case. When you have an inherited IRA, just understand right away that this is an account you're not adding money to, but you have to be taking money out. All right. It doesn't necessarily mean you have to do it this year, but that's really what you have to understand with inherited IRAs is that, I'm going to be taking money out of this thing. Let's plan how to do that because there are tax consequences.
Is there a time limit?
There absolutely is a time limit, but it all depends. So what you really want to know is that it's basically going to be 10 years. Okay. Within 10 years.
You've got to clear it out in 10 years.
You got to clear out the entire balance in 10 years. Now, there are going to be exceptions to that rule, but that's the one that most people are going to fall into. So you inherit $500,000 in an IRA. It's now $500,000 in an inherited IRA, and you have 10 years to zero out that balance. As you take money out, and you get to decide how much to take every year over 10 years. When you take money out is when you pay tax on it. So this is traditional inherited IRA. So if you take out 50,000 of the 500, you have 50,000 of income that gets reported on your tax return in that year.
Ooh.
So that's how it works. But basically, yeah, just recognize the basic rule: 10 years got to be emptied.
I see. And what about RMDs, which, as I understand it, are like nuclear bombs that we used to drop and hopefully won't in the future?
No, not those MDs. RMDs.
No. RM. Oh, okay. Thank you.
Required minimum distributions. So here's an important caveat. So the IRS hadn't really defined these rules, but now they've given some guidance on this. So it was like 10 years, you have to empty the whole thing. And that's kind of all they said. So it was left up to you, like, when do I have to do it? How often? And they didn't really provide a lot of guidance. It's still mostly that way that you can pretty much decide. But the one thing you have to pay attention to is if the person you inherited it from was required to be taking distributions, then you are also required to take a certain amount. And you can take more than that, but you have to at least take that.
I'd like to introduce a new segment called Questions from a Dumbass, in which I ask the kind of question that I fear is going to make me sound like a dumbass. Mike, if I don't know offhand if the decedent has started to take required minimum distributions, is that something that I can readily find out? Like, is that information like right in the account? How do I know?
Yeah, it's not going to be in the account, but it is in their age. So and this is actually a good point, Matt. So I like your dumbass question. It actually leads to a really, really smart answer. So keep them coming.
That's the job. That's the whole job of this podcast. I ask the dumb stuff and you sound smart. Oh, gosh.
Don't tell the listeners that.
I think they figured that shit out, man. All right, go on. So it's all in their age. I never knew this. Yeah. Go on.
Yeah. So, and in fact, you really have to know the date of birth and date of death. So find this out. So I just inherited an IRA. Who's it from? Okay. Full name, get their social security number, get their date of birth and their date of death, and keep that information handy. Keep it around, because every so often you're going to have to like tell somebody that. Like, I, as a financial advisor, ask my clients all the time, oh, you got this inherited IRA. I see the name because it's titled, it's from Matt Robison and now it's owned by Mike Morton. So I see that, but okay, Matt Robison, what was his date of death? What was his date of birth? What's his social security number? I need that information to do some calculations.
Loving this example. Okay. So that's the RMD thing. Now, you mentioned the R word before, Roth IRAs. Is there a difference here? Because you spend a lot of time banging on about the beauty of Roth IRAs, and I'm starting to get the picture. So is that a distinction I need to care about?
Yeah, it is a distinction in the sense of these required distributions. So I've inherited a Roth IRA. I still have the exact same rules. I have to empty it in 10 years. And then I look at the second rule. Hey, do I have to start taking, do I have to take distributions? Was Matt taking his required distributions? Oh, it's a Roth IRA. They don't have required distributions. Okay. So I'm not required to take out money each year. All right. So now I'm thinking about my 10-year plan. Maybe I want to spread out, taking 50 grand a year over 10 years. But wait, Roth IRAs, when I take the money out, have no tax consequences, never get taxed on the money again. And while it's in the account, it's growing tax-free. So $500,000 that I inherited from Matt Robison is growing tax-free. I leave 100% of it in there for 10 years, growing tax-free to $1 million. And then I take out all $1 million and I have no tax consequences.
And then you get a tax-free, you turn an RMD into a WMD, right? And a weapon of mass, I want to come up with a better D, like a mass tax-free income. That's amazing. Wow. Okay.
It is amazing. This is why this is like the double whammy of Roth IRAs. I keep hammering hey, save some money in Roth. And then your descendants, your beneficiaries are going to be and I get another 10 years of this thing growing tax-free.
If we ask ChatGPT, what's one thing that characterizes Mike Morton as a financial advisor and his presence on this podcast, the answer would be Roth IRAs. Check it out.
Roth IRAs, man.
And I'm beginning to see why. The message is seeping in. So you introduced a really interesting wrinkle here, which is this whole Roth, you've already paid taxes. You can give yourself a tax-free income bomb after 10 years. How do you advise people to kind of handle the distributions and meeting them out? Like there's a strategy to this, right?
Yeah. Let's go over the most likely strategy. All right. You're in your 40s or 50s, you're still working, you inherited an IRA from your parents. So you've got your regular income because you're still at work, and you've got massive expenses like we talk about on the show because you're trying to send 3 kids and prepare them for college, send them to college. But you have 10 years to empty this. And so it's $500,000. The best way to think about that is just spread out the tax. So you want to take, 1/10 or so each year, because then say you have 300,000 of income, you're bumping up to 350,000 of income by taking that distribution. So your tax hit's not too bad. You don't want to empty all 500,000, because then you have an 800,000 of income in a single year and you're getting whacked with bigger taxes. So typically you're working for the next 10 years in a stable job, spread it out, take, about 1/10 or so each year. And that would be the general plan.
What about along the way? So, you're talking about a plan, right? I've got this pot. We'll go back to your example. I'm dead now. Great. So you've got a pot of, I left you $500,000 for no freaking reason.
Perfectly great reason.
Perfectly great reason. Because I know you're going to do something great with it. So you've got $500K from me. You've got to collect it all. You've got to empty that out in 10 years. What do you do along the way? I mean, you still need to invest the money, or what do you do with that IRA?
Yeah. So make sure when you're inheriting an IRA, again, it's like every other account. So I said, you log into Fidelity and you see it right alongside your brokerage account and your own IRA. Now it says inherited IRA and it's 500,000. So you want to make sure it stays invested appropriately. Now, when I say the word appropriately, it's, however you think you're going to spend the money. So if you weren't really planning on this, it wasn't part of your financial plan, and hey, I got 500,000 from Matt sort of unexpectedly. I'm not really planning on using the money. Then you could be pretty aggressive on investing the money inside that account. Even if you're retiring in 5 years, if you're not planning to spend that money as part of your own financial plan within the next 10 years, you can invest it aggressively. So really kind of think about when you're going to be spending those dollars. Make it part of your plan, and then make sure that it's invested. A lot of times, Matt, it will come to you already invested, right? And these investments might be 10 or 20 years old. Matt picked them 20 years ago, and like, who knows what he was thinking.
Don't mess with the basis, right? Like let them be.
No, basis doesn't matter. It's inside. They're inside an IRA, so you could sell everything and have there's no tax consequences.
Got it.
So you definitely want to review. So I should have said this at the top. When you inherit an IRA, one of the first things you want to do is review what it's invested in. Matt picked these things 20 years ago. This is often what happens, right? Oh, I don't know. Like they were just,
then it's wrong. Yeah.
Who knows? So you definitely want to review
pets.com.
Exactly. Yeah. Review what's there. And make your own decisions. Here's how I like to invest: low cost index funds. Let's go ahead and swap out, these old things that Matt picked. They're not so good, to something new.
All right. Man, I feel like we covered an awful lot of ground here. So you said at the top, we were going to do what is an inherited IRA? What are the rules? What are the exceptions? What are the tax strategies? Make sure to invest, which is one of the first things actually in retrospect to check. And what to do, how to formulate a plan. I feel like you covered all that. What did we miss? Any nits to pick?
That's it. I mean, they're really, again, for 80% of people, this is what it is. Got to empty it in 10 years and kind of figure out these things, but just spend a little time. If you're inheriting an IRA, please spend a little bit of time making sure that you know the rules, that you've got the right ones that are applying to you. There are exceptions to these things. So just make sure that you double check that stuff before you come up with a plan. But once you've kind of like checked all the boxes, this is what I have, this is what I want to do, this is my plan, put on autopilot, check in once a year, rebalance once a year, and you're good to go.
All right. Well, with that, we will get to our listener question, which, as I teased at the top, is another issue of intergenerational wealth transfer. And the question is, my parents want to help pay for our kids' college. Is it better for them to gift us cash now or keep it in their estate?
Okay. Let's start with the 80% again. 80% of the time, I would say just gift the cash now. This is great. Thanks very much, parents, for helping me out with my kids. College that is looming large and getting more expensive by the day. So that's great. And then you can put it in a 529. You can keep it in a brokerage. Kind of depends if your kids are, getting ready to go to school or already in college. So that's 80% of it. It's like, it's probably, $10,000 or $20,000. That's so wonderful and amazing. Really appreciate it. And we're going to spend that money next year or in 3 years for college. So now is a great time for helping out what we know, Matt, is this crunched time between, still working, aging parents, kids going to college, and like all the income in and expenses going out.
Got it. Okay.
Yeah, but there's a little bit more.
You always got exceptions.
Always exceptions.
What if I'm not in the 80%?
So if you're not in the 80%, some things to consider, right? If you gift now, it gets it out of the parent's estate. They might have estate issues. So gifting earlier could help their tax situation, which is great, and it helps the parents now. But you do want to consider gifting rules. I said, hey, it's probably $10,000 or $20,000. What if we're talking $100,000?
Right.
Now we've got gift tax rules. You could pay that directly to the college. If the parents are looking to lower their estate and they're like, hey, we're looking to kind of gift $80,000, $100,000. If your kid's in college, they could pay 1 year of college tuition directly to the college. Because when you pay, you can pay for anybody's health or education costs with no gift tax rules, as long as you pay it directly to the institution.
Oh,
so Matt,
that's a good one.
If you want to go back to college for $50,000 a year, I could pay for that full $50,000. I'll write a check to UMass, and you could, Dude, I could pay that, and there's no gift tax problems.
I literally had a nightmare, not last night, the night before, that I decided to go back to grad school, and like we're all getting together. I just got an email from my grad school about the 25-year reunion. And so, of course, that's why it's rattling around my mind. And, I'm one of these people who has school stress dreams. And so I decided for no apparent reason to re-enroll in grad school and do it all over again. And thanks for dredging that up. I really appreciate it. Hey, if you want Mike to dredge up fascinating nuggets like the one he just delivered, you can email him at pod@mortonfa.com. If you're a client of Mike's, just call him. That's all you have to do. Just call him up. All right. It is time for our one thing segment. And let me just give a very, very quick preamble here. I was fixing to give you our usual one thing piece of practical advice to smooth your pathway through life on the way to giving away your individual retirement account to your kids. And I decided, all right, look, I could just use a little prompting help, a little assist from our friends in the Silicon universe. So I went to ChatGPT and I entered a prompt just asking, could you give a suggestion for a one thing closing segment for the pod, something useful, interesting that we can chat about for a couple of minutes, a practical day-to-day life tip, or an interesting fact that we can use. I'm not going to reveal what it said. I'm not going to give that away quite yet. What I will tell you is that ChatGPT said, here is something that you can use on 5-Minute Finance with Mike Morton. And then it asked, would you like for me to format it in your usual light banter, chit-chat kind of way for a closing segment on 5-Minute Finance? Mike, this is creepy. I never, ever told ChatGPT what this is for, what this pod is. What the hell, man?
It's listening, dude. The internet is listening.
I guess I'm going to sign off now. ChatGPT knows what I'm about to say. If you're done listening, you can just ask ChatGPT how I signed off for Mike Morton and 5-Minute Finance. We'll see you next time.
I hope to see you next time, Matt. Thanks for joining us on Financial Life Planning. If you like what you heard, please subscribe to and rate the podcast on Apple iTunes or Spotify or wherever you get your podcasts. It makes a massive difference. If you have a comment or question, please email me, mike@mortonfa.com. Until next time, thanks for tuning in. This recording is for informational purposes only and should not be considered for investment advice. Opinions expressed are as of the date of recording. Such opinions are subject to change. I cannot guarantee the accuracy or completeness of the data presented here.